So NFP data came out weak for dollar, and that is why you can see we had all this bearish momentum on Friday. So considering we have market structure shift on the daily time frame and all this bearish momentum, is dollar finally bearish, or are we still in a retracement of the bullish price action? That's what you're going to find out in this weekly outlook video. If you have not subscribed to this channel, kindly hit the subscribe button and like this video. Because it's a new week, we're going to set our analysis from the weekly time frame. And of course, if you trade major pairs, you have to start your analysis with the dollar index, because the dollar index is our leading indicator. Now, if you look at the weekly time frame, you can see price action is really clear. The moment we swept these lows here, the first time here we got market structure shift, which is also short change of character. Then we had this retracement. From after getting this retracement, you can see price gave us what? A new higher high. So we had a break of structure at this point. So right now what you can say is, as long as price is inside this dealing range from this low to this high, any bearish momentum is considered a retracement and not really a reversal. So at this point, I have no reason at all to say that finally our dollar bias is changing to bearish, because this right here is our protected low. And if you look at this, you can see clearly we had this order block here, but so far the market has inverted it. Then right here we do have a monthly fair value gap somewhere here. We'll check it on the monthly time frame, it's more clear. But then if you look keenly, you can see we do have another what? This right here is an order block. And you can see this order block also comes with this gap right here. So if you make that all one PD array, so far this is what we have. And you can see this is actually at the discount of this dealing range. Remember we said if you want to buy, the best place to buy from is from a discount when the market gives us a retracement. So if the dollar is going to still give us a deeper retracement, then this is likely the next place that dollar is going for before finally we continue with the bullish momentum. So let's look at the daily time frame. As you can see, it's really clear. We had all this bearish momentum. The market has actually inverted this daily fair value gap. So if this daily fair value gap is inverted, this is likely to be used to push price to this weekly order block and the volume imbalance that we had here, the gap, before we finally continue with the bullish momentum. Because generally dollar, I'm still bullish. So I'm just trying to see at what point are we going to be done with the retracement, because all this is considered a retracement. Just the same way, after dollar gave us market structure shift right here, we had all this bearish momentum as just as a retracement. So I see that as the same thing that is happening here. Now, if you're not going to get a deeper retracement to these lows here, the first thing that I will need to see the market actually reclaim this inversion fair value gap, because at this point here, this is no longer a fair value gap. This is right now an inversion fair value gap. Then this should be used as support to now start the bullish momentum. So now that we're done with analyzing the dollar index, it becomes now easier to analyze major pairs. So now a pair like USDCHF, which is what I want us to look at next, is positively correlated with dollar, which means if you're expecting a bullish dollar, then the same for USDCHF. If dollar is bearish, then the same thing for USDCHF. So that is how understanding currency correlation will actually help you line up pairs that have a correlation. Now, if you look at USDCHF, you can clearly see it's the same thing. We had actually a new higher formed. And if you're going to look at this dealing range from this low to this high, anything lower is just a retracement, because this right here is our protected low. So let's look at the daily time frame, and you can clearly see we actually had SMT with DXY. USDCHF took out these highs here Wednesday 24th, well, DXY price did not do that. And all these, we can say this was a retracement. Price has tagged this volume imbalance right there. So it would really be nice actually if we see that retracement for price to tag this monthly fair value gap and also tag this daily fair value gap before we continue with that bullish momentum. Like I've said, we are going to use DXY as our leading indicator. If DXY gives us a deeper retracement, then expect this bearish momentum for USDCHF. If DXY is done with the retracement and we start seeing a bullish momentum, expect the same thing for USDCHF. So before we continue, if you've been wondering how I'm able to do this kind of top-down analysis, I actually teach this in the trading bootcamp that I normally have every single month. We go beyond just learning the concept. I'll show you how to combine them, build a directional bias, identify your key levels, executions, and entries. So the next cohort starts on August 12th. I'll leave a link in the description box below. I'll also pin it in the comment section. So now let's look at EURUSD, and you're going to start with the weekly time frame. Clearly you can see again we do have a dealing range. Price formed from this high to this low the moment we made a new lower low. So EURUSD and dollar are negatively correlated, which means if dollar is bullish, EURUSD is doing the opposite. And all this again is considered a retracement. So let's look at the daily time frame, and you can clearly see we do have this daily bearish fair value gap, and I actually wanted to see this be used to push price lower so that we'll be done with the retracement. However, if this market is still giving us a deeper retracement, I will not be shocked if the market comes all the way to these highs here. So I'm looking at two things. Either the market now at this point, we're done with the retracement at this point and we start seeing a bearish EURUSD, or we still get more bullish momentum, price take out this high, tag this, give us then we have the bearish momentum. So now let's look at GBPUSD. So GBPUSD and dollar are negatively correlated. So far GBPUSD, if you look at the weekly time frame, the market structure is not really that clear. So far this is what we have. So what I want to look at, I'm watching this weekly fair value gap. The day this gets inverted, and then that is a confirmation for me that GBPUSD is ready to give us the bearish momentum. So let's look at the daily time frame, and you can clearly see we have this bullish fair value gap. Now, if you're going to see bullish GBPUSD, then the market needs to come to this fair value gap, and this will act as a discount PD array. For bearish GBPUSD, which is what I want to see, especially if dollar turns bullish, then we'd like to see price invert this fair value gap and get that bearish momentum. So now let's look at gold. And if you look at gold, of course, you can clearly see 2026 for some time we've been bearish gold. On the weekly time frame, you can clearly see we had this low, we got a retracement, and now the market has made a new lower low. So all this any bullish momentum that we see for gold here, that is just considered a retracement, because for gold, this right here is our protected high, and you can clearly see the premium of this range is above here. So if you're going to still get a deeper retracement, then the market is likely actually get to this order block right here. And again, if you look at it, you'll realize that right now gold has actually tagged a monthly fair value gap. So there's still a possibility if you're not going to get a deeper retracement, then gold is at a right point which we can give us now the bearish momentum, or now we get that deeper retracement before we see that bearish momentum. Now let's look at the daily time frame, and you can clearly see we have this inversion fair value gap, which has actually now been reclaimed by price, but that's still okay. We are still inside a higher time frame major key level. Now, if you're going to have that bullish move, you can clearly see gold, we do have this fair value gap here. At this point, you can consider gold really at a premium, and if you want to buy, always the best place to buy from is from a discount. And right now this will act as your discount. Although we do have this reclaimed inversion fair value gap, this can still be used as support to give more bullish gold momentum. Now if you're going to see bearish gold, then definitely you will need to see the market actually finally come invert this fair value gap, then we see that bearish momentum. So lastly, let's look at BTCUSD. Again, if you have not subscribed, kindly hit that subscribe button, and if you like this video, don't forget to give it a thumbs up. Now if you look at BTCUSD, it's still very clear we want to see price tag this fair value gap on the weekly time frame, where we also have a monthly fair value gap before we see more bearish momentum for BTCUSD. So now let's look at the daily time frame, and still it's really clear. So far we do have this order block here, and we also have this price action there. So far what I want to see, we want to see price actually retrace. You can even tag this order block, and then we continue with that bullish momentum, because this is our draw of liquidity. Actually, this buy side liquidity here and this buy side liquidity, these are relative equal highs, and the market loves to go for such kind of highs. So I want to see price get here. Then of course, finally, once we are inside this key level, we are expecting a bearish momentum. So that is all I prepared for this weekly outlook video. If you enjoyed this video, give it a thumbs up. I'll see you in the next one.